Welcome to Markets Now. I'm Michelle Rook along with Vince Boddicker with Farmers Trading Company. Seeing some mixed trading grain and livestock futures. Those commodities that are to the downside, corn, soybeans, and cattle, but we have wheat and hogs to the plus side. And Vince, let's deal, I guess, with maybe the negative in the grain market. First, corn and soybeans down. Some of this continues to be some of this risk off from the outside markets, especially when you've got crude oil down below the $70 mark.
Yes, and I think corn held up fairly well yesterday. We beat it up pretty good this morning, but last 15 minutes it came back uh, and then faded again. But if we can stay in a close above that 570 area, I think we're okay in July. If not, maybe we're going to try to check out 5 to 520. Hopefully not, but I think that's a potential objective if things go there. The bean market, as you and I discussed, I think so much of that is the ugly basis in Brazil, and the last 10 days, it's amazing how wide that's got.
Yeah. And soybeans, we actually took out the March lows here in the July contract. We'd held those for quite a while, which was surprising with what you had just said about what had happened with
Yep.
Brazil prices.
Yes. Yep. And now we got to see, do we close down here? Is it something else? But, it's hard to think about this, but with that basis you have in Brazil, could things get ugly enough? You take this thing down to 1280 to 13 in July. You can't rule it out, I don't think.
Right. So I also want to touch on the risk off that we're seeing the Fed meeting today. Obviously, we're already anticipating a quarter basis point increase, but it's what the Fed does after that that's more important in terms of whether they take a pause, right?
Right. And I'm not sure what they're going to do. We can guess all we want. Time will tell us. Historically, if you look back in past history when these things happened, there's been times they've taken pauses and it wasn't a good idea if inflation was still present. So we'll have to see where this whole thing shakes out. And
Yeah.
I guess I've seen several different broadcasts and ideas on the Fed, and I have a different opinion than most people do, and it's that the Fed isn't here to help you. It's here to create opportunities for a few people.
Yeah, and I guess I'm wondering, we've had a lot of risk aversion in these commodity markets just as a result of what's been going on, not only with the Fed action, but how that's created this trickle down into these bank failures and whatnot. Do you think if the Fed decides to take a pause here, that maybe we can get some confidence back in some of these commodities, get the funds maybe to come back in and participate or not?
I think it's a possibility, yes. And if I remember seasonally, the end of the first week or the second week of May, typically the corn and beans put in a high or a low, depending which direction they're going. And right now, it's sure not looking like a high.
Yeah. So what about the wheat market? New contract lows in all three exchanges again yesterday. It's been an ugly race to the bottom here, but we're seeing a little bit of a bounce today. Is that anything more than just some short covering because we're so oversold, or what are you attributing it to?
I think time will tell us. But just before we came on, I had a chance to look at some tweets and did see one in here where there was a drone attack on the Kremlin this morning, and there's whether it's a facility there or a grain facility close to that's burning. And I think that's really what turned the wheat in here on fears of, well, maybe there's going to be more problems, and we're not going to keep shipping. We'll have to see.
Yeah. We also had the Oklahoma crop tour kind of confirm a smaller crop. I would assume that, when we get into Kansas, we're probably going to get some of that confirmation as well. But right now, Vince, it just feels like the market isn't really respecting the idea of a smaller crop on the HRW side, or that we may not get planted on the spring wheat crop.
Yeah. Sometimes it gets to be psychology, and I think that's what you are. If you look, I think it was late last night or early this morning, there was another story out that talked about Russian wheat stocks are 79% above the average. And you get all those things, and yeah, there's parts in this country that don't look good, but the French crop they're thinking is going to be pretty good. And I think it's more so, along with the risk off, just a bad psychology. You've got the managed money heavily short the wheat, and until they get punished for a few days, it probably continues to be ugly, but hopefully you're somewhere near a bottom in here.
Yeah, and demand has not been good either on the wheat side of things. And then I think Egypt just bought a big tender of wheat, and Russia was part of that too. So
Yes. Yeah.
yeah, so that's probably part of it as well. All right, so the cattle market, some follow through selling pressure this morning. Unfortunately, we've taken out some kind of key support areas here in the June live cattle now, haven't we?
We have. You were thinking that 62.35 area from last week was good. Could you take this thing all the way down to 59 to 61 and really not do a lot of damage? Yeah, you can take it further than that. But the big key is, will they do a lot in here with the discount to cash? But I think on the other side, we have to remember 90 to 90% of our trade are the algorithm traders, and all they're going to do is look at news and trade it. They could care less where things are at proportionally.
Yeah, and they're chasing this headline here of what's
Yeah,
been going on in terms of the macroeconomic environment and what the Fed's going to do too, aren't they?
I think so. Yes.
Yeah. So do you think that we've also seen maybe a little bit of a top though in the cash and the cutout values because the lower cash yesterday by a buck at 172 in the South also seemed to kind of press that market yesterday?
I think definitely. I got to go back and look whether it was 2 weeks ago tomorrow or 3 weeks ago tomorrow. You had that Thursday high, and when you didn't take that out the next week, I think it was indicative that you have a spring high, and we're going to meander around in here for a couple of weeks anyway. When I look at some of my timing things, we're looking for 9 to 11 a week lows in both the feeders and the fats, either late this week in the fats and then about 10 days out when you get into the feeder cattle. So they'll probably meet in the middle someplace, but that thing is usually accurate. Then you also have a seasonal, and in feeders, the time to buy them is that second week of May.
Oh, I know you watch those seasonals really closely and those timing cycles. Hogs, lastly, we'll end with that. Like we said, cattle are lower, but hogs are higher. How much of this bounce that we're seeing today is just a function of unwinding those cattle hog spreads?
I think it's some, but I think it's more so the fact that last week you did finally get some of those managed funds to lift some of their shorts. Look at it from a different take. I really think you've got a bottom in there. I don't think you're going to run away with the freezer stocks we have of ham and bellies in there. And then we need to keep in tune that we are 16 to $18 premium in that June contract of the cash. And until that gets closer, I don't think there's a lot of upside. But if we can just go sideways and stay above that 88.70 level or so on the close, I think it's constructive.
Yeah, it looks like the futures market is, because we're ahead of the cash, the funds have been kind of saying, hey, prove it to me that this cash market's going to catch up first before we add on any more longs, right? Or
Right.
cover our shorts.
Yes.
All right. Thanks for joining us, Vince Boddicker with Farmers Trading Company. And that is Markets Now.